You're gonna go apply for a loan. Maybe you already have applied for a loan and you know your credit score needs just a little bitty boost. Well, you're gonna wanna watch this video because I'm gonna show you just how to do that, and we're getting into it right now. Hey everybody, Dietric.Williams, realtor with Compass, Baldwin Hills, California. Welcome back to another edition of Info on the Go, the show where I give tips, tricks, and insight on how to buy, sell, or invest in real estate in Southern California. If that sounds like something that you're interested in, please hit that subscribe button and tap that bell so that you're notified every time I upload new content to YouTube. Now, if you've been paying attention over the past several months, I've been talking about credit. And one of the things that I've talked about in the past was something called the credit utilization rate. That makes up 30% of your FICO score. Now, what is your credit utilization rate? Well, let me just break it down like this. Suppose that you have a $10,000 limit on your Amex card and you've spent $3,000 of that. Your credit utilization is 30%, 3,000 divided by 10,000. Typically, lenders like to see that amount just around 30%. But if yours is a little bit higher, then it could be damaging your score tremendously, because remember, it does make up 30% of your score. So you want to work on lowering your credit utilization rate. Why is your credit utilization rate important? Because the lower your credit utilization rate, the better you're going to get on the rates and terms of a mortgage loan. If it's really bad, they're going to ding you really, really hard. So you just want to make sure that your utilization rate for your credit is 30% or lower. Now, let's suppose that you need a certain FICO score to qualify for a specific loan type. You may be close. So let's say, just for instance, you want to go get an FHA loan. You know the credit score for that is 640, but you sit at roughly a 625 or a 630. Your lender can do something that's called a rapid rescore. Now, how does a rapid rescore work? Well, if you've paid down or paid off the balance to one of those credit cards, chances are that the creditors have not reported that to the credit reporting bureaus just yet. So it could take anywhere from 30, 60, sometimes maybe 90 days after you've paid it off or paid it down for it to go through the billing cycle to report to the credit bureaus. And in the meantime, you're shopping for a mortgage or trying to get refinanced, and those things aren't reflective on your credit. Well, your lender again can do something called a rapid rescore. That's where they take proof and show it to the repositories that you actually have paid off or paid down that balance. Now, to do a rapid rescore usually costs on average about $40, and that's per credit bureau. So if, say for instance, you want to report to all three, Experian, Equifax, and TransUnion, it's going to cost you $120. Now that's per line item. So multiply that by the number of line items that you want to have rescored. So for example, if you have 5 credit cards and you want to report to each of those bureaus, that's $120 times 5. That's $600. But here's the good news. It's really not going to cost you anything, and that's because it's free from the lender. Why? Because the Fair Credit Reporting Act prohibits lenders from charging clients to dispute or correct credit report information. Now, once the credit report is updated, a new credit score can be requested, and usually it will result in a higher score. Keep in mind though, this is a service that only the lender can do. You cannot personally go out and run a rapid rescore for yourself. Is a rapid rescore right for you? Well, it really kind of depends on the situation. If you are able to do these things on your own accord, it may be better to do it that way. But if you're pressed for time, your lender may request that we do, or that you do, a rapid rescore so that you can take advantage of boosting that score and lowering the amount of fees that you're going to pay in interest over the long term. I also want to stress that a rapid rescore is not a foolproof methodology. There's no guarantee that your score is going to go up once you have a rapid rescore. Now, why do I say that? Because you may pay off some debt and that will help lower your credit utilization rate. But if you have late payments or you close accounts, the rescore is not going to help you in terms of those things. So while it may help you to pay off some debt, it may hurt you in other areas. So again, just remember, the rapid rescore is not a guarantee. So if you have late payments, it's not going to work. Also, keep in mind that if you're using a significant portion of your savings to pay down or pay off some of that debt, You may not have enough money left over for the down payment and or the closing costs in order for you to purchase the home. And you may need some money as a new homeowner to pay for certain repairs, so you just want to keep that in mind. Again, please understand, I want to reiterate this, that the rapid rescore will not fix certain things on your credit report. So if you have a foreclosure or a bankruptcy, it's not going to take care of that stuff. Also, it's not going to fix inaccurate information. Those are things that you are going to have to file a dispute over. So if you have a late payment, but you don't believe that you've paid late, you're gonna have to dispute that. I'll talk about that in another video down the line. But this could be a strategy to help you save hundreds of thousands of dollars over the long term. Now, if you're looking for other videos on how to improve your credit score, or you just wanna know which FICO score metric that the lenders use, you're gonna wanna watch these videos I did right here.